Hey, it's Vinny. I got my green on. Tesla finally had a green day today, up 3%, while it is still down, obviously, 71%. Yikes, year to date. So I just want to do a quick update on where I'm at with Tesla. Have I changed my mind? Has anything changed? And look through some things. So obviously, Tesla has been utterly crashing this year, has not been kind to it, as we can see. And there must be good reason, right? I mean, for Tesla to be down 70%, they must be saddled with debt, growth non-existent, competition here. Let's take a look at their recent Q3 earnings report really quick. So Tesla down 70% today. Meanwhile, let's see back on Earth what Tesla's actually been doing. Automotive revenues, Q3 2021, so a year ago, were $12 billion. Q4 2021, almost 16 billion. Q1 2022, 16.8 billion. Now Q2 2022, we did have a little slowdown down to a measly 14.6 billion. Oh, that's right. That was because their export hub, the Shanghai factory, was forcibly locked down for a significant chunk of the quarter due to COVID lockdowns. But it has since reopened in Q3 2022. They did 18.6 billion in automotive revenue, good for 55% year-over-year growth. 55% year-over-year growth. Stock is down 71%. Okay, makes sense. Let's look a little deeper. I don't know. Tesla, the company, must be imploding here. There's got to be something. Okay, free cash flows. 1.3 billion Q3 of last year, 3.2 billion Q3 of this year, good for 148% growth. So free cash flow has grown 148%. Automotive revenues have grown 55% year over year here. What about the deliveries? Well, they must be completely crashing. Nobody wants to buy Teslas anymore, right? I don't see any Teslas anywhere. Total deliveries of the Model 3, Y, S, and X. Q3 2021, we had 241 million. Q3 of 2022, we had 343 million, good for 42% growth year over year. Okay, once again, growing their deliveries 42% year over year, and the stock is down 72%. Something is not adding up here. Which leads me to the next point. Tesla, the company, the fundamentals are better than ever. They have no debt. They've got a very strong balance sheet. They've got plenty of cash, $21 billion of cash on the balance sheet. Many were clamoring for Tesla to do a stock buyback, which I've been against, especially as we head into a potential recession. It seems more and more likely in 2023, the first half. But I'm glad that, they're so well capitalized. Tesla's got $21 billion in cash. They've got no debt. They've got a tremendous growth rate here. So why is the stock down so much? Well, there's obviously been a lot of macro pressures. Now we've got the end of the year, tax loss harvesting, and all kinds of stuff. It's down 37% in just the past month alone. Obviously, Elon buying Twitter. That's been a whole debacle. But I believe that this too shall pass. And I think Twitter, in the long run, will be a blip on the radar for Tesla. In fact, this may be hard to imagine right now, but I truly believe 5 years from now, Twitter will probably have done a lot of good for Tesla. So let's just take a look at something small here. It's probably nothing. And then I'm going to talk a little bit about what my strategy is with Tesla here. I've got about 55% of my portfolio in Tesla stock. And here's my plan, how I'm going to handle the next few months. So if we go back here, this is my Twitter. You can follow me at withvinny1. I post some useful stuff sometimes, maybe mostly just terrible memes that I make. But how it started versus how it's going. This is just one small little feature that's been introduced on Twitter. Here we have Dan O'Dowd, wonderful guy who's always going after Tesla, must be from the good of his heart. Posts, why is Tesla plunging? Elon Musk, the quote said, full self-driving is the difference between Tesla being worth a lot of money and being worth basically zero. Many competitors have driverless robo-taxis, but after 8 years of development, FSD will still run down a child in a school crosswalk. Oh my goodness, that does not sound good. But lo and behold, I'll just zoom in here so you can see the community notes a new Tesla feature. Sorry, not a new Tesla feature, a new Twitter feature. Was pinned to this tweet that gives you the full picture of the story. Dan O'Dowd owns a competing company writing self-driving software. Dan O'Dowd previously attempted to show FSD will run down a child and was debunked. Another user performed a test and it worked as expected. Tesla's FSD has over 55 million miles driven without any reported injuries. So I'm already starting to see this is just one small little way of how Twitter benefits Tesla, because obviously a big problem with Tesla is the people who don't follow it super closely just see the headlines, just see whatever CNBC is talking about, just see nonsense like this from our buddy Dan O'Dowd, and they take it as fact. But obviously, this guy has his own self-interest in seeing Tesla fail. So this is from a while ago, but it later came out that this was fake, that they faked the whole thing. I don't know how all this is allowed, but that's a whole other conversation, how this is legal to defamate the company. But that's okay. It gives the short sellers some ammunition. But here we are today. Obviously, it's a lot more than that, but that was just one little thing I thought was interesting. I'm already seeing benefits to Tesla from the Twitter acquisition. So I know it's really hard to think long term, and short term, it's obviously created quite a headache. I don't need to go into that. You're well aware of it. But Tesla to me was always a long-term game here. But let's pull up some useful stuff here. I saw this poll and it kind of blew my mind here, posted by Invest to Live. He put up a poll on Twitter. If you do not own an EV, which would be your first choice? If you do not own an electric vehicle, which would be your first choice? GM, Government Motors, got 3% of the vote. Ford got 5% of the vote. Toyota got 13% of the vote, and Tesla got a whopping 79% of the vote. Now, this is not even a Tesla channel. Invest to Live, highly recommend you follow him, check him out. He's got great insights on the market, but he really just focuses on the general market. He doesn't go a whole lot into specifics on individual companies, surely not Tesla. He really doesn't talk much about Tesla. So seeing that this was a diverse account that's not even a Tesla account, and a little sample size here, 566 votes, and Tesla is the most popular one with 80% of the vote nearly. If you want to buy a new EV, which one would you buy? I mean, this tells me everything I need to know. So while everyone is super bearish, obviously, when the stock is flying high, everyone's all excited. And I think the whole Twitter thing, if Tesla was at $400 right now, people probably wouldn't care as much. But this is the reality, is it's crashing. We've got a lot of issues still going on from a macro perspective. Not a whole lot to do with Tesla's fundamentals. Again, the company is fundamentally in the best position that they ever have been, okay? So what am I doing moving forward here? And then I want to give you guys a little channel update as we head into the new year. So I've slowly been buying into Tesla. It's, like I said, it's 55% of my portfolio. I'm trying to be responsible and keep some type of diversity, however small, because I do like to sleep at night. But I am still buying very, very little at a time of Tesla these days. And if it continues to drop, I'll have to buy more. But in the meantime, what I decided to go and do was I do a little options trading. Again, I'm like 80-90% long-term investor, probably 10 to 20%, do a little more short-term stuff. But decided today, after thinking about it for the last couple weeks, I decided to buy a Tesla put. Expires in March, $70 put. This is optionsprofitcalculator.com. Really useful tool to just kind of visualize it. So here's a scenario for me. I bought this put, and we'll see if I'm going to buy more or just keep the one. To me, this is just a little insurance. If Tesla were to keep dropping, you can kind of get an idea of what happens with this option. So let's just say if we get to late January and Tesla, has dropped to $80 or so, I'll be up 100% on this position. If things get really bad, to me, I'm just trying to think realistically. If we get more black swan events, if things really go south and we do enter a recession next year and it does get bad, maybe the floor for Tesla could be $50. I have no idea. Nobody knows. It could do anything. But let's just say if Tesla were to get as low as $50, at which point I would definitely be very interested in buying more stock in probably bigger quantities than I am now. If Tesla were to hit $50, then this contract that I bought would make me a 642% return. That's by January timeframe. So you get the picture. Small price to pay is the way I saw it. Again, because I am so heavily exposed to Tesla, figured it wasn't the worst idea to give myself a little bit of downside protection. Yeah, it would have been great to do this a year ago, but this is just the reality of the situation. I don't think anyone could have seen this happening. Tesla down 69%. Over the past year, when it's had record quarter after record quarter after record quarter. And yeah, you could argue it was overvalued. It definitely got ahead of itself a little bit when they get a Hertz deal for 100,000 cars. Very good, but is it worth $100 billion addition to their market cap? Probably not. Anyway, I'm staying the course. I'm excited for the future. I think, it was always about Tesla in the long term here. Short term, anything can happen. Another terrible meme I posted. Again, if you're interested, check out my Twitter. Wait, Tesla's a long term play? Always has been. So I've got my eye on 2025, 2030 when it comes to Tesla. And between now and then, anything can happen. This stock could drop another 50%. It could very well get to $50. This could be the bottom. I don't have a crystal ball. If you do, please let us know in the comments below, or let us know what you think is going to happen here with Tesla and the broader market as we head into 2023. I don't think we're out of the woods yet. When the market decides to price that in and we hit a bottom, who knows? So yeah, in addition to that, and again, if you enjoyed this video so far, if you enjoyed the content, please don't forget to subscribe to the channel for more. Leave me a comment below. But I just want to give you guys a quick little channel update. I apologize that I haven't been posting much the past month. Been busy with the holidays, been busy with a big move. But Investment Club 2023, we're heading into 2023. I have lots of exciting stuff coming. Definitely going to get back to posting on a regular basis. I'm also going to start a Substack. I want to kind of just go back to, where I started. I'm on this journey. I'm learning. I've been investing for about 4 years now, just continuously learning. Just read this book, 100 Baggers. Fantastic read. Highly recommend it. So I'm going to just be sharing everything I learn as I learn it. I'm going to be doing updates on Tesla. I've got a few companies I'm looking at in my pipeline here that I want to write articles on and do videos. So that'll all be coming. One is Symbotic, a warehouse automation company. Very interesting. Chipotle, I've taken an interest in, not only the food, but I've been looking at the stock a little bit. I'm going to do a deep dive into that. Obviously, more Tesla updates to come. So I'm excited. I hope you all have a great New Year. Happy New Year. So don't get too caught up in the short term here. So Happy New Year. Thank you all for watching. Leave me a comment below. Let me know what you think. And I'm excited to bring you guys some awesome content in 2023. This is Vinny from the Investment Club, and I'll see you next year.